entrepreneurs, are you trying to make bigger profits in your small business? Like many of us, I'm sure you're feeling it. Business is hard, and now more than ever, you need to have a plan to help your business not just survive, but thrive. And it can happen as simply as thinking with the end in mind. I'm Marcia. I'm a business growth strategist. I've helped tons of small business owners to establish and implement a tangible plan that guarantees increased profitability, guides your growth, and plans for a future exit. Because a business worth selling is also a business worth owning. And I want to share strategies that I've earned and learned with you on today's Profit with a Plan podcast. But before we get started, I have something great to share with my listeners. I put together an insightful and think outside the box live masterclass. This 15-minute training has been specifically designed to help you learn how to get your business sale ready, even if you aren't thinking of selling it yet. Why now? Join me and find out all the benefits that come with having a sale-ready business. Register for free at scale2sell.biz. All right, I'm excited to have my guest on and fellow Provisor expert, Yuko Tsuchida. And she is a certified public accountant with over 10 years of tax consulting experience, advising multinational corporations on value-added tax strategies. Her strategic advisory firm, Hito, specializes in income tax planning, R&D credits, investment, employee and training tax credits, and incentive services. Throughout her career, she has helped clients claim over $100 million in incentives and credits. I love this. Hito is the Japanese term for people, and Yuko believes that people drive business growth. Hito provides value-added tax consulting services focused on tax incentives and credits. Hito accelerates the growth of businesses and promotes change through tax benefits. This helps businesses unlock savings by minimizing taxes and freeing up capital for reinvestment into the business and its employees. Wow, Yuko, thank you so much for coming on Profit with a Plan. Welcome.
Thank you, Marcia. I'm so excited to be here.
Me too. This is such an interesting topic for me. And I think most businesses are unaware of the advantages that the government gets us. But before we get going on this, tell me, how in the world did you come around to become a CPA and focusing on credits?
Sure. So when I decided I want to become like CPA when I was like 14 or like 13 or 14.
No way.
I actually wanted to become a math professor, but my parents thought for me to become a teacher, it was just not fit to my personality. So they start introducing me to a lot of different profession they knew. And one of the thing it really kind of catch my eye was whenever my parents' tax CPA was at my house doing tax audit for my parents' business. It was very fascinating how they're negotiating and talking to government officials and how they're helping my parents. So I started asking a lot of questions during this audit, which I probably shouldn't have, if I think about it right now. But after that, my parents' CPA come every single month. I talk to my parents. So I start asking a lot of questions and studying what the CPA or tax people were. And I just found it so fascinating that at young age, I said I got to become a CPA. So I pursued that, my dream and became CPA. So I started my career was filing tax returns for multinational corporations.
Mm-hmm.
I have to say it was great experience, but I was just not cut out for it. And I didn't really like that, filing tax return, but it was great training ground. And from that, background, I learned, credit incentive. And it was just a rotation between, big four accounting firm. And I was in the Japanese practice, but I had opportunity to work with different department. And that's when I found out credit incentive. And I was just fascinated by it because it was more how do you call it? diamond mining or
Ooh,
finding
yeah.
opportunities. And like, nobody knew. And clients like really saw the benefit what we are bringing to them. So I just loved it. And like since then, like I've been doing like credit incentive for like over 10 years.
Yeah, that's amazing. And most people only think of CPAs as the ones that are crunching the numbers. They're going to file the forms. You only go see them once a year, if that, and not the kind of thing that you would think that would come and add more value to the company. And that's why it was so important to have you on, because there are so many advantages that the government gives us business owners, which is
Mm-hmm.
why we become business owners, because we're bringing employees, we're adding value to the economy, and the government rewards us with these incentives. And I think just business owners today, at least in the small communities and the small markets that I tend to work in, they just don't know that there's these
Yeah.
incentives out there. And so, all right. So I think these are fantastic, and I'm so glad you're passionate about it, just like me, and that's why we've connected so nicely. So what kind of credits, let's kind of talk high level and then we'll go through some more details. What kind of credits are available, and maybe even are credits like grants or discounts, or what are they?
Okay, so I'll like put in like like couple like big buckets. So uh, both like federal level and state level, there are so many tax credits or tax incentive. Whenever I say tax credits, those are typically like looking back, and then it's set in the code section, meaning like laws and regulations. So if you meet the criteria, you will qualify. So that would like fall into like employee retention tax credit, which came out in the COVID, and R&D tax credit. A lot of like manufacturer people probably like know WATC and like empowerment zone credits and so forth. And other bucket is what's called like future looking. So like incentives, like whenever we say incentive, it's like pre-approval tax credits, or there is a discretionary fund by governmental like agency. Like most of the state have like what's called discretionary like tax credits or incentives. So before you make any investment or start hiring people, like you can go to those jurisdiction and start negotiating those tax credits.
Love it. And credits are free money, right? It's not like you get a discount on your taxes. It's actually, or is it a discount on your taxes when we talk about credits?
So it's a typically dollar to dollar deduction of taxes, and some are refundable. So if it's refundable, actually, like government will write you a check. And if it's a non-refundable tax credit, those credit, like if you cannot use it in a certain tax year, you can carry over to certain year.
That to me is fantastic, because we pay so much, especially here in California. We pay so much in taxes as a business owner. It's great to see what kind of incentives and credits that we can get back. So I love it. One is looking backwards, and we can go back a couple of years to calculate a credit. And then the other one is looking forward, where we're saying, okay, I'm going to make this investment. Can I get this deduction back?
Mm-hmm.
And it just, I mean, how do we do this? How do we plan for this as business owners? What should
Yeah.
we do?
Sure. So like a lot of time, like I talk to like my clients about, and my clients and like my friends about, if you're only like, talking to one CPA, you're probably not going to be maximizing all the tax credits, right? So like for me, like, I decided not to like, focus on tax preparation, but there's like, traditional CPA, like people are helping them file and be able to comply with the law. That's one profession.
I was
And
just going
that
to say, yeah, there's many lanes instead of a
yeah.
CPA.
And then tax credit, tax incentive is very different animal from compliance. So typically like people are specializing in that. Like if you're like, dealing with big four accounting firm or like methodology, like, RCM, like a larger firm, they have all these people in their firm. But if you're like dealing with like more smaller scale CPA firm, you need to like, build a team around them, like, traditional CPA, financial advisor, tax credit people, and like, if you need like sales and use tax like people, like there's a lot of specialists. So I say like, finding the good people and like, teaming up with them, that's probably the first step.
Excellent, excellent. I love that you differentiated the fact that there are so many lanes inside of a service, and not all CPAs are forward planning. Many of them are simply backwards looking. What did you do last year? Here's how it's going to work, and then going forward. And you want to have the right kind of mix on having those forward planning advisors coming on, like the financial and the tax planning and the credits, like you're talking about. Love this. So educational for us and so needed. Because I mean, gosh, as a business owner, we wear all these many hats, right? And we have to understand this and this and this and that, but yet we don't really want to do it, or probably shouldn't ever do our own accounting. But to have the expertise and know that there are people out there that can help us evaluate and take advantage of all the opportunities that we have as business owners. So that's cool. All right. Let's talk about some of these credits and how they work for us and what might we not know about that we should.
So the biggest one right now is like, employee retention tax credits. So it came out from the CARES Act during like COVID, allowing like, companies who are affected by COVID to claim up to $26,000 per employee. And actually, this tax credit was eliminated November 15th last year. However, there's 3 years to like go back and amend the tax return and claim those tax credits. And this one is amazing because government decided to write the check instead of like, saying like no refundable tax credits. So it's really to help company like, go through like tough time. So if companies like, haven't like take a look at it, like, they probably should. So there's two ways to qualify, right, Marcia? One is you can show gross receipt drop comparing to pre-COVID era. So 2020 comparing to 2019, that would be like 50%. And if you go to 2021, you can only show like 20% drop from 2019, which is pre-COVID era. So that's one way to show like, companies are affected by COVID.
And honestly, almost everybody was affected by COVID in one way, shape, or form by being forced to close down. And when we were forced to close down, our customers didn't find us as frequently. And it's not just thinking of the hotels and restaurants, but every company suffered. And so the probability of your difference between 21 and 2019 and 20 and 2019 incomes are highly probable that you were affected. So this stands for almost everybody, every business out there.
Yeah. And then like at your point, like, second way to qualify is like, if we can prove the company was fully shut down or partially shut down, they could qualify too. And like, there's like nuances in the code section, like, partially meaning we need to prove that 10% or more business was shut down. So not all the business have to shut down, like only like, nominal amount, which was like defined by like 10%. So I think IRS like came out like, report saying like, only like less than 20% of the entitled business are only taking these credits. So 80% people are like, missing it.
They're still out there.
Yeah.
Gosh. And we have 3 years to file and look back. So there's still an opportunity for all business owners to apply for these credits. And, especially us that aren't getting necessarily the tax advice that we should be getting, it might be a missed opportunity for you. And so how many employees do you need to have on your payroll in order to collect a credit like this?
More than like one for ERC. But one thing is owners or related party to owners probably typically don't qualify. So, if you are only employee and you're owner of your business, you won't qualify. But if you actually have like employees, like you should qualify for that credits.
Excellent. Wow. This is fantastic. And up to $26,000 per employee. So
Right.
that means, maybe you don't get 26,000, but hey, how would it feel to get maybe 5 or 10,000 per employee handed
Mm-hmm.
to you as a check sometime soon, right? And then
Yeah.
multiply that by the years. Happy to accept, right? Money. And this money, you don't have to prove that you're using it for any specific use. It's just coming back to you because you suffered a little bit and they're trying to help you keep your business flowing and can continue to grow and develop and keep people, right?
That's correct. A lot of
Cool.
one more point, like I want to make for this one, like a lot of company didn't claim this credit because they said they took a PPP loan.
Ah,
And originally, if company got received like PPP loan, they were not entitled to. But during 2020, December 2020, Congress changed that law. So even you receive PPP loan, you are still entitled to ERC above and
wow.
beyond of a PPP. So that's something
Good.
companies should look at.
Surprise, surprise. More money
Yeah.
available, folks, listening to this. All right. So we talked about the employee retention credit. Talk to us about some of the other credits that are out there.
Sure. So R&D tax credit is always fun credit for us. I say fun because we get to learn about a lot about like our clients and what they're developing and what they're like improving. So what R&D is, this was enacted in 80s, and US government wanted to keep the R&D activity in the US soil. So they are incentivizing company to do R&D activities in the US. So what is
To
R&D activity,
develop,
right?
yeah.
Yeah.
Tell us what R&D really means.
So it's very broad defined. So what they say was if company is developing or enhancing their product or process relying on hard science, they may qualify for credits. But you have to,
That's
yeah, there's a
I was going to say
four-part
that's
test, but
amazing.
yeah. So a lot of people, Marcia, think oh, R&D credit for is like biotech who is like in a lab court and doing a lot of pharmaceutical testing. But I have a client from biotech to manufacturing to even breweries and wineries. So you can think about a lot of stuff you are developing, and you may qualify for those credits.
So I've heard that if you are a service company and you've developed a process or a treatment or something like that. So say you're service and you're a chiropractor and you have an amazing treatment that you developed. It's still chiropractic, but you've managed to add different levers or angles or exercises or treatments to make it to it. That still may qualify because you're
Mm-hmm.
innovating and developing. So it doesn't have to be making the widget. It could be developing a process or
Right.
a system that has enhanced your solution to the
Mm-hmm.
market, right?
Right. And that
Interesting.
technology or services or those techniques you're developing, it doesn't have to be new to the world. It just needs to be new to your company.
Ah, so that opens the door to a lot of folks getting this kind of credit. Is
Mm-hmm.
it hard to apply for this credit? Do you have to kind of stand on your head to be able to get it?
There's a lot going on in the R&D study. Really need to there's a lot of case law out there. So what we do is we interview companies and all employees who are involved in R&D activities, and we actually quantify and qualify. And calculation portion is one, but where we spend a lot of time is really documenting and making sure they actually qualify and why. And there's as I said, there's a 4-part test. So our memorandum will based on do they overcome and do they fit qualify under those 4-part tests.
Nice. So there's opportunities. There's definitely opportunities. And really, truly, I love the way that this one was established way back when in the 80s. And the government was saying, we want you to innovate here in the US.
Mm-hmm.
That was the whole concept for it. And unless you have someone like yourself Yuko and Hito to come in and say, did you know? And this is how we've been able to help our clients. You never would have thought to look at these opportunities for your business.
Yeah.
Wow, amazing. All right, so R&D, what kind of credits do we expect from that? What have you seen?
You mean dollar amounts or?
Yeah, give us the money. Show us the
Sure.
money.
Sure. So like R&D tax credit, like, in California, we say like high level. Let's say if you have like $200,000 of like qualified expenses, probably 10 to 15% of that would be like, tax credit. So 20,000 to about 30,000. So
Wow.
that's kind of like our benchmark typically.
I love it. Love it. And that just helps you invest and reinvest back into your
Mm-hmm.
company and gives you the desire to do it because you can get some of that cost back for the investment that you're putting forward in it. Wonderful. All right. So we've talked about ERC and R&D. What other kind of credits or incentives are available that today's small business owner might want to look for?
So there's a couple like, state tax credit we can talk about, like specifically like in California. So there's a one called like California Competes Tax Credit.
What was that? One more time. California what?
California Competes Tax Credits.
Okay.
So this is a competitive like tax credits, and California government is trying to like, invest in company who are threatened to move out of California, or they may want to come to California. So like, for example, like, I have a SaaS company I've been working with, and during the COVID, like, they started during COVID, and then so they never like established like headquarters anywhere. But right now they're trying to establish headquarters like either in Arizona, California, or Indiana. So we are negotiating tax credit with like, those three states, and California is one, and California would like to like, invest those type of company who has different option outside of California.
So yeah, knowing that California is such a friendly state to work in as a business, I'm being very facetious here, looking at opportunities to keep us here, excuse me, is very interesting because there are better or more favorable states to work in. And if you are established here, you don't have to be a new company to get that credit, right?
Mm-hmm. Yeah, it doesn't have to be like I presented like, manufacturing plant in California who were thinking about moving to Tennessee, or who were actually thinking about expanding Tennessee, but California awarded the credit for them to like, expand in California. So there's a lot of ways to like, see like, what type of like, companies California interested in. And there's a like, website, and there's a like, a nice group of people like called GoBiz. You can like, call them and like ask questions. So it's a great credits. Like if you really thinking about maybe expanding outside of California or moving out of California.
Nice. Wow. So again, you have to have someone that understands what is available out there to help you with those. Okay. So what other kind of credits might we be looking for in incentives?
So another one, like, California, I will just like stay in California because we are in California. There's a what's called like California Employee Training Panel, which is a training reimbursement grants. So it's a training reimbursement. So like, if you are training like any employees, and there's like always every single year they come up as like, specific industry they are focusing on. So like,
whoop, we froze here. Are you coming back? Uh-oh. Hello, Yuko. Let's see if she comes back. Whoop, are you there?
Can you hear?
Okay, I froze or you froze, but you were just getting so I can I can fix that. But you were talking about the employee training credit. So if you can start back from there, we can let all the listeners know.
Perfect. So California Employment Training Panel. So this is a training reimbursement program. So any companies could qualify, and like this is a pre-approval, reimbursement program. So you have to go apply, and then if you get awarded, you will get reimbursement back. But it's really cool program. Any employee pay into what's called ETP fund every single month through our payroll. So any company is entitled to it. However, California has more focused industry like construction, manufacturing, cybersecurity, and stuff like that. But if you get awarded, how that program works is any training other than sexual harassment or some legal mandated training, they will fund those training.
Wow.
So anything from on-the-job training, to management, Excel courses, anything you can think about. California is really interested, bringing, employees' skill set up and, keep those, California, employee in California. So it's a really great program. If you get qualified for a specific industry, like federal industry, you get $23 per hour reimbursement for live training, on the job or classroom training. And I believe it's $13 in reimbursement for every hour employees spend on a computer-based training without instructors.
Wow. Well, see, there's so much available out there that we don't even know about. And if we're already training our employees to do the tasks that they need to do, why not see if you qualify for this so you can get reimbursed for the time that you're training? Because we all know hiring an employee for the first year is a little bit more expensive because they're not really functioning at full capabilities, and that onboarding and training cycle is expensive. So if we can get some help to train, why not? See, this is why I'm so excited to have you on, because there's so many different things that business owners need to be aware of. All right, so we got a few minutes left. Can we kind of go over, are there any other credits that you wanted to introduce that maybe we should have conversation about?
There's so many of them, so I gotta save you time. I think a lot of time I will say whenever you're in a high growth mode, talk to your CPA and find out who they have relationship with on the tax credit, tax incentives, and making sure you talk to them way before you make investment. Once you make an investment, it's harder to negotiate with states. It's harder to get pre-approval because state already know you gotta be there.
Right, so, you're already doing it, so there's no incentive to make you do it. Where some of these are incentives to get you to hire more, to research and create more stuff here, or stay in the state that you're in. This is awesome. All right, so is there any others that maybe you want to touch on before we go, or you want to just
probably any other states, majority of 50 states in America, they provide similar tax credits. One is better than other, but any states you are looking at growing or expanding, just make sure to talk to your CPA.
Perfect. Okay, so we love these credit ideas. These are super important, folks, for you to think about throughout the year. And that's why this conversation was so important to have. We're just past the tax season. We're going into the third quarter of the year. We're halfway through approximately. Gosh, where did this year go, right? It went by so fast. But this is more important times for you during the summer to reach out to your tax advisor and say, what's available to me? And more important, maybe you should be reaching out to a tax specialist like Yuko and her company Hito to find out what's available and to do some discovery for it. I know it's not that expensive. It's an investment to get an investment back, but to hire and engage a CPA such as Hito to do this kind of research for you is so important. Are there timelines that maybe we should consider or look at before they come out and reach out to you?
So this is a really good time right now. It's a good time to reach out because we are coming back from busy season and we have a little bit more time to do our planning. So, and we do free assessment upfront. We see this is our partnership with my clients. They need to feel really comfortable with us, opening up probably only executive will know the information about. So we want to make sure there's a synergy and it's a good fit. So we do that free assessment upfront and making sure we can work together as a team.
I love it. So, like I said, this is such a great time of the year for us to relook back, reevaluate our business, see what we've done in the first part of the year, see what we're going to do in the rest of the year, and to start the ball rolling so you can take advantage of all the opportunities that are going to come your way throughout the year. Tax planning and credit planning should be done all year long. There's not the one time a year that you reach out to your tax advisor, and that's why I wanted to bring you on today. So I think this is perfect. All right, Yuko, where can listeners find out more about you and your company and how you might be able to help them?
Sure, you can go to our website, Hito LLC, HITOLLC.com, or connect me through LinkedIn.
Love it. And you can work in any state, right? You're not just
Correct.
licensed or trapped to California. So if you're listening from Arizona or Colorado or wherever you're listening from, Hito can help you there as well. So great. Thank you so much.
Thank you,
all right,
Marcia.
Yeah, I hope you found a couple ideas that you can put into your business that will help you become more profitable. I got to tell you, free money, money that you've earned or that you would have to pay out, that's a huge mover of the needle and could give you that leverage or the tool to be able to invest back into your company, to maybe hire a new person, or just continue to grow. And because we're all about growth here, this was a really important conversation. And what better way to do it than Yuko. So, all right. So now more than ever, it's important to build your business like you want to sell it. Don't forget to register for my new free 15-minute training on how to get your business sale ready. Even if you aren't thinking of selling it yet, remember there's tons of benefits to having a sale ready business, like more freedom, more money, and an easier to run business. So go register for free at scale2sell.biz. You don't want to miss this class. And Yuko and I would love to hear your questions. So if you have any questions about any tax credits, or maybe something specific to your industry or field, and you're just wondering what's out there for me, hit us up on the comments, ask the question. Yuko and I will be here and we'll answer those questions for you on the chat. So please do that, comment on the show, and then don't forget to subscribe. You always don't want to miss these podcasts. And as always, you want to catch Profit with a Plan on any of your favorite podcast players. And we're looking forward to more great profitable information on next week's show. So until then, make your plans and profit with them. Thanks, Yuko.
Thank you.